And joining me on the podcast and on video, check that out. It's Vadim Alexandre, Head of Healthcare, SP Angel. You all right, fella?
How are you doing, Justin?
Yeah, all right. The market's a bit frustrating, I'm finding. It's been like that for me. Less frustrating than there were, but there were signs that were taking off a little bit, and then all of a sudden it's like gone off the boil. It is like, in fact, it's like a pot on the boil. The lid of the pan keeps coming open and letting the steam out and just goes back down. So it's a bit of bubbling, simmering away, but it's not picking up any heat, and it's cooling
Yeah,
down all the time. It's
yeah.
a little bit annoying.
It is. It is very annoying, actually. I know. Exactly. There's the stocks have rallied, and now they're petering out again.
Yeah.
Individual healthcare companies are they're seeing it too. So it's like it's sector wide. There's clearly a macro element to this, but yeah, a lot of the rallies have petered out.
What's frustrating is American sort of, I think they're having a bit of a broader market rally a little bit.
Yeah.
But over here, like I said, there are one or two stocks in a rally. They sort of come back. But yeah, it's just a little bit frustrating. And like, how many stocks do you hold, Vadim, on average? I mean, have you,
No, never more than 20. Usually around 15. Yeah.
yeah, yeah. Any of them performing well?
Yeah, so I mean, I'm still, I was lucky enough to get, progressively, liquidity over the period of the downturn. I got out of some stocks, some I didn't get out of, so did terrible in a handful. And then I started buying into other sectors. So this is because I was heavily overweight on healthcare because it's the sector I'm involved in, right?
Yeah.
So I know, you always invest in what you know. But I did reposition into, and we've discussed this in the past on various podcasts, into more retail-oriented stocks, but specifically like online retail stocks, like AO.com, what's another one? Deliveroo, companies like that. Just picking them up really at the bottom, to about a year and a half ago. Others didn't do as well, like Asos and Boohoo.
Boohoo.
Those are
Yeah.
still bouncing around the bottom at around the levels I picked them up on, slightly lower on one of them. But and then another one I bought into is Easyjet, which I has also done okay. And the thinking there was just diversification, but also so these companies I still think have a lot of promise. The retail is still up, the fashion giants on online retailing like Boohoo and Asos. The jury's still out. I'm not 100% convinced those. I might take my, if they hit my in price, I might get out. But I do think Deliveroo is in good shape. I do think that Asos is in good shape, and they have a lot lot of upside. And then
AO World, you mean?
Easyjet's just underpriced, in my opinion,
Yeah.
for where they
When
are.
you say in good shape, you meant AO World and Deliveroo, not ASOS. You
Yeah,
said
exactly.
yeah.
AO and Deliveroo are my two favorites of those four. The
Yeah.
Boohoo ASOS ones are just bouncing around the bottom, and they need to get out. It's less clear whether they're going to get out of this
Yeah.
as easily. And
Well,
then
with them, it's almost like they're struggling on there. I don't know, what happened. They've got almost like a perfect storm of competition coming on from
yeah,
all areas, and you've got cost of living crisis. Then you've got fast fashion taking a bit of a hit and all that stuff. It's a lot of things going on. So
exactly.
yeah,
And the thinking then was that the economy is going to pick up again, and these stocks they're just hammered. They're so hammered, and I'm not alone in buying them. There was also the fact that
yeah,
Fraser's Group was buying into them as well, right? So it's following a known consolidator, a known kind of value seeker, an investor that buys at the bottom. So part of that thinking was that was all part of the thinking, and I still think they're going to do something there. And
yeah.
there will be value extracted from those investments from Fraser's Group. So there were just tucked away for the longer term, those two, the Asos and the Boohoo. I might get out partially if I can get out at a price, if it bounces or whatever, and not reduce my exposure. But the other two I like a lot. I do think AO has mileage, and I do think Deliveroo both of those stocks have mileage. I mean, Deliveroo is the one that's clearly outperforming amongst that group compared to Just Eat and compared to Delivery Hero. They're miles ahead. They're
Yeah.
smaller, but they're very good in their market, which is in the UK. So, you know, they
Yeah.
really do dominate in London and in the UK, Deliveroo. And I just don't see anyone displacing them, including Uber. I don't see Uber displacing them. You know what I mean?
No. Yeah,
So
but
in,
just
yeah,
quickly look at the chart there of Boohoo. It's very interesting because if you see here, there's at this 40 pence level. It's rallied this before. Then it broke down below the sort of support level, which is about 32 pence. And because it had an extreme sell-off, then it broke up to like 42, came back down, and now it hasn't broken 40 the last twice.
yeah,
But I'd say 40, then 42. If you can break 42, that's a good sign. 'Cause it's not done that for a while. It only sort of did that after an oversold. But you can see in the range, it's a range of about 32 pence. It
yeah,
seems to be holding. I'm just
yeah,
saying, what would be the catalyst for this? Maybe it is just interest rates coming down and the entire market being a bit more, bullish. Maybe
yeah.
that's what will move it forward, and that's going to happen, So, and who knows when? I think the Americans will have to go first, maybe.
Well, and
But
they are going first, and you know that's
yeah,
you know I do believe that that's going to happen. I think we're at a turn in the market. It's possible we get it all wrong, and the magnificent seven are on a tear all on their own, and it'll always stay that way. But it never history
yeah,
has demonstrated that it starts in the large liquid stocks, it moves down, and people look
yeah,
for risk elsewhere. I
yeah,
mean,
yeah, yeah.
upside
Well, it's
elsewhere.
happening now. It's happening now. I've been watching sort of CNBC sort of in the afternoons, and they've said several times it's now coming from, there's people looking for because they're seeing these massive companies that are rallied very strong, very hard.
Yeah,
Doesn't matter
yeah,
how good a business you are, you get to a certain level valuation wise. You think, well, it's done like 100% in the last 6 months. It can't do another 100%. It can't go. Like Microsoft
correct.
can't go from what 3 trillion to 6 trillion, whatever it is. It's going to be impossible, pretty
Yeah,
much. So yeah, yeah. So I mean, they're seeing a broader rally there,
yeah.
and yet the bigger stocks are not really, apart from Nvidia, are not really now outperforming. They're treading water a little bit. But let's get back to your area of speciality.
Yeah.
You got a lot of views last week, maybe because we mentioned Avacta, which is very well followed. Took a bit of a hammer. In fact, where's the chart on that now? Uh, um, they say it was crawling down, and people were worried about a 75 pence fundraise on social media. And actually did a 50 pence fundraise, which is, really is a gut punch. And I don't know how long it'll take to sort of
So
recover from
many
that.
companies are doing that. It's just the
Yeah,
nature of the market right now,
yeah,
but for buyers, it's an opportunity,
yeah.
like as in,
And
I guess my point being is that these discounted placings, for existing investors, it's painful. For new buyers, it creates a good opportunity.
yeah, and you mentioned Hemogenyx as well. Got a lot of interest in that because
Yeah,
I think it's one of those. I do honestly believe that's one of those sort of whenever I look around for stocks, hope high potential stocks that have the potential to do big rallies,
yeah,
but they've got to have cash, and they just raised cash with you guys, and
yeah,
so that's a good thing. So, but someone did say, oh, by the way, they can't T, even though it's
yeah,
huge upside potential and some mega deals being done in that space,
yeah.
um, for billions of dollars, and then
It-
these are companies are going into phase 1B, aren't they?
Absolutely.
So it's not like they are phase 2 or 3. They are
No,
phase 1, and this is where Hemo is going into now. Is phase 1.
yeah,
So, but someone did say there's other platforms they have as well. So I'm sure
they
you're aware of
do.
that. But, yeah.
Yeah, and that's the other thing that I like about this company is the fallback. All these therapies are risky, right? So
Mm.
that's the nature of biotech. You are taking on risk. Things can fall over, trials can fail, patients can be negatively affected by medications. I mean, CAR T is notoriously dangerous, to be quite honest. But it's also the flip side is it works really well when it works. And that's the risk, of biotech. But what you really want is ultimately having a fallback in case and a diversification of platforms and programs. And that's the thing that is lost a little bit, I think, on Hemogenyx, because so much focus is on the lead therapy going into
Mm.
clinic, which is really good. That's a
Yeah.
monumental step forward for the business that they're moving into clinic with their CAR T therapy. But they have two other platforms. One is an antibody therapy. It's called the CDX platform, and then the second platform is it's called the CBR platform. Stands for chimeric bait receptor, which is another cell-based therapy like CAR T. CAR T is a cell-based therapy. CBR is a cell-based therapy, which is entirely proprietary to Hemogenyx. Quite novel, quite interesting, and the big thing actually, and that's really interesting about a second cell-based platform is that part of the difficulty of getting cell-based therapies through the FDA is you need to demonstrate manufacturing capability. You need to demonstrate, basically everything you can imagine, right? Like GMP, all the ISO certifications, CMC chemistry. You have to demonstrate to the FDA that you are capable of making these cells, okay, to pharmaceutical grade standard before they ever allow you to move into clinic. They've achieved all that, which is exactly the good news that's allowed them to commence this trial, right? But the beauty of it is you only have to really do it once, and your second platform can now benefit from all that work. So it's not an accident that their second platform is a cell-based therapy, because now they're leveraging all the heavy lifting that they had to go through with the FDA. You still have to obviously submit for clinical trials and all that. Every trial is a specific application, but you don't have to go and start to re-demonstrate that you're able to grow cells and expand them. And, there's a lot of work that doesn't need to be repeated, basically.
Okay, cool.
Yeah.
And as far as news and milestones, it's hard to say, of course, but what would you expect news out on next? Any idea?
So definitely the other platform, so the CBR platform, has been generating and will continue generating, I'm sure, good news and advancements in how those programs are doing. So I would expect kind of like a steady, set of news flow from that, specifically from the CBR platform. And then obviously CAR-T, well, it's as they progress to getting that first patient tested. Okay, so the first patient, the company was hoping to get, that sometime in the summer, probably towards the back end of the summer, would be a great outcome if they got their first CAR-T, therapy into their first patient. That's the big news down the line. And then, steps along that way of, visibility on that, how things are progressing.
So work is progressing. And you mentioned another company before we came on, is a sort of small cap with a bit of potential.
Yeah, I mean, for I really like, these small cap biotech companies, because the upside is, the downside, as long as they have cash and as long as, something progresses, the downside is quite protected in that of course they can go down, but they tend to bounce back up, right? And Hemogenyx time and time again bounces back up, and on
massive bounces. Look at that. Even recently, it did like 256% in about a couple of weeks.
Exactly.
So,
and that's the key.
That's one of the smaller ones as well. One of the smaller bounces that.
Correct. No, absolutely. It can, easily bounce 30-40% and sometimes double. Exactly. So this is the nature of these stocks. Another one that's similar to it, different liquidity profile, but similar in nature, is a company called Bivictrix, which is a roughly 10 million market cap business. The ticker is BVX. So that's
BVX. Okay.
Yeah.
That's
BVX. There you go.
Okay.
So that one also in the area of AML, because Hemogenyx is in acute myeloid leukemia. This company is also targeting it. Completely different strategy though. And by the way, in oncology, there will never be a winner takes all silver bullet solution. It's all about different therapies for different patient sets, right? So they're not competitors really. Okay. What Bivictrix does is they're not in cell therapies to treat leukemia. Theirs is it's called an ADC, bispecific antibody. What that means is ADC stands for antibody drug conjugate. So we've all heard of antibody therapies. So antibodies are very good. They're protein-based molecules that target very specifically whatever it is you're targeting. Okay. And multi-billion-dollar drugs are antibody therapies. All the rage in antibody therapies now is to attach a payload to the antibody. So that payload is either a chemotherapeutic agent or a radiochemical, radioisotope, basically. So the new move in antibody therapies is to attach a payload so that when you hit the target that you're very specifically aiming for, and that antibodies do well at hitting, you're killing it all the more because that payload is delivered to the target. Okay. What Bivictrix has done that's even more interesting is they have an ADC, but it has two targets now. So it targets two specific antigens with high specificity. Okay, and that's not quite common yet. It's kind of an evolution of all this other work that have gotten us to ADCs, but now ADCs that target two antigens, and there's a reason for that, is because you want to be even more specific at killing cancer cells and not killing non-cancerous cells. Okay, so their lead therapy is a treatment for AML, for acute myeloid leukemia, and they're targeting a known antigen, which is already, there's a drug that's been approved called Mylotarg by Pfizer that targets the same antigen. So we know in terms of de-risking these, it's a de-risking strategy to target a known antigen, but it also targets a second antigen that's only present on these cancerous cells, which makes them more likely kill a cancerous cell and not kill a non-cancerous cell, which causes all kinds of deadly side effects. The known drug that's out there, Mylotarg, is actually quite toxic because of that, because it kills the cancer very well, but it also kills healthy cells very well, which is part of the problem. So what they're doing is they're evolving this a little further by being more specific to just the cancerous cells, by hitting the second antigen that's only present on cancerous cells. So anyways, long story short, the approach is novel. It's very interesting. Again, a small company, 10 million market cap, but with huge upside potential. And they're also cashed up. We raised some money for them several months back, and it's ticking along nicely, that company.
Yeah, so they raised 2 million back in. I looked at the wrong company there. I was looking at I put BVX in, and it came up with a different company. It came up with
not Bioventyx. No, it's
not Bivictrix.
No, yeah,
I was thinking this is ridiculously undervalued.
That one's
company is generating cash.
Unfortunately. Yeah.
So
No, that one is that's not the same company exactly. No, but Bivictrix is about a 10 million market cap business.
Yeah. Okay, and it's been going in the downtrend there, and it's that 200-day moving average. It can't break. If it breaks that, I'd suggest it's going to go higher, because it hasn't that for a long time. So
and that's it. I mean, they've been suffering like everyone else in the general malaise in healthcare. I mean, the biotech market's just been kind of dead for 2 years. But as things pick up, these are the kinds of stocks that you want to be looking at and preparing for. Should there be a big change in momentum, they move very quickly. I think that's the thinking that one has to kind of, in this space, that you pick your stocks ahead of time and be ready to move when they
start small, take your positions, and then maybe if it rises, average up, it starts to move nicely. But because they can be volatile both ways.
Exactly.
So just generally, last question quickly. I know you have to shoot off, but what's it like? I mean, is it still hard to raise funds? I mean, is it is it getting easier? Is it less hard?
Definitely picking. It's a bit less hard, but it's still hard. So the things are picking up slightly, which is good. I mean, this is exactly what we all want to be seeing. Is there's a slight renewed interest in risky assets. Biotech is a good barometer of that, because it's at the highest end of risk, right? So without question, that's kind of when in the risk on, you basically, it's the place where you feel slight changes the most. You know what I mean? It's kind of out on the periphery. So when investor appetite returns to biotech, it's kind of an early sign of health returning to markets.
Yeah. Well, let's hope the next couple of months. So I did say a while back, I think it was in the end of, or even the start of this year or the end of last year, I did say I think Q1 is going to be a little bit dodgy. And then hopefully in comes the ISA season, and maybe a movement of the Bank of England talking about interest rates, and in fact we have got it's a start. But the Chancellor yesterday said UK stocks can get an extra £5,000 a year in their ISA, which it shows it's not a silver bullet, of course, but it shows that he knows the problem and he wants to address it in some kind of way and attract some sort of inward investment. So it's good. Marvelous. Thanks for that, Vadim. Speaking next week.
Excellent. Thanks, Justin. Speak soon.